Well, good afternoon, traders. We've got to take a step back. We've been talking about this ISM manufacturing number. Of course, manufacturing is a very cyclical part of the economy. It makes up about 14% of US GDP, but the market has shown a great sensitivity to this. Now, the fact is, in the US numbers last night, we got 49.1. The market was looking for 51.2, so this is obviously well below expectations. I think all sectors of this, or all subcomponents of the manufacturing number, bar one, have shown contraction. Now, that's not a great look for the US economy. For the recession callers out there, I would say that we still got chinks to be found in the labour market. That's not happening yet. If you look at the service sector, it's still pretty robust. Until those areas start cracking down, we're not going to see a big impact necessarily on consumer sentiment, although the University of Michigan numbers the other day were quite weak. But the market has taken this as a bit of a negative situation. I think if you can coexist this with another sort of defiant Trump tweet, and we've seen a risk-off session in the US, certainly in the US equity markets. And that hasn't really necessarily spilled out into Asia. If you have a look at the Asian equity markets, Hong Kong up 291 points, the Chinese market up 31 points. We're seeing a bit of a negative tape coming through in Australia. The ASX 200 is down 42 points, which is probably a reflection of what we saw in the US markets. But have a look at our European opening calls and US opening calls. There's a little bit of love coming back into them. There's a few buyers stepping in. Now, as we go through the session in the US, I think you've got to look at a couple of the big central bank speakers. Firstly, in Europe, we're going to be listening to Philip Lane. He's the ECB chief economist, probably one of the most influential members of the ECB in terms of what they're going to be doing with policy. There's been a whole raft of different ECB speakers speaking over the last week or two, most of them suggesting different degrees of what they're going to be talking about with quantitative easing, or whether they're going to take the deposit rate down by 10, 20 or not even at all. And I think Mr. Lane will throw some light on that. So he's speaking at 9 o'clock Eastern Standard Time. So anyone running Euro positions or DAX positions, I'd certainly be looking at those comments and seeing how that sort of feeds into the idea about what the ECB will be doing at their September central bank meeting there. In the US, you've got John Williams, who's the New York Fed speaker, president. He speaks at just before 12 o'clock, 23:35. Do remember that he's a core member of the Federal Reserve, and if you go back to the speech that he gave up into the warm-up of the 25 basis point cut that we saw in August, we saw this big faux pas where effectively he gave us this really strong impression that he wanted to cut by 50 basis points. As soon as he stopped speaking, the New York Fed then gave us a press release that suggested that we misinterpreted the comments there. So will he be able to communicate with markets somewhat better? We'll have to see how that all goes. But certainly anyone running US dollar positions or anything sensitive to what we've been seeing with Fed pricing, such as gold, silver, platinum, all those factors, do keep an eye on for John Williams' comments. The market has done a little bit of a bid up in terms of what they're expecting for the September Fed meeting. There's about a 20% chance, just over a 20% chance now, that we're going to get a 50 basis point cut based on the comments that we saw from James Bullard last night, the St. Louis Fed president. He is now advocating for a 50 basis point cut. Now, he's a dove, he's a voting member as well, but he's changed his call now from 25 to 50 basis points. The market has priced that in. Hence, we're seeing a little bit of weakness cracking in, or the upside curve to a degree, in the US dollar. Coursing across our FX markets today, we've seen a lot of activity playing through in the pound. Obviously, there's been a lot of political developments there. The government has lost their case there, and effectively there's going to be some motions which potentially could get passed tomorrow. Or tonight, should we say. That will probably lead to a general election. The question is will Jeremy Corbyn take the bait for an election on the 14th of October, or will we look to have an election sometime after a short extension? We'll have to see how that goes, but certainly cable's been moving up a little bit higher. There's clearly a readjustment coming through. We've also seen a bit of strength coming through in the Australian dollar. We saw their GDP numbers coming through today. They were in line with expectations, up 50 basis points or 1.4% year on year. It's nothing really too concerning. I think basically people are looking more at the Q3 data, but the Aussie has had a bit of a run. We are looking very closely at what's happening in Aussie CAD, given the Bank of Canada come out at midnight. The Aussie CAD had a bullish outside day reversal, and we're just seeing it sort of test into the top end of its recent range, something to watch out for. People who are running CAD positions, do be aware, as I say, we do have the CAD meeting coming through. Now, 24 out of 24 economists are calling for rates to be kept on hold. We've got a 10% chance of a rate cut being priced into rates market, so it's not particularly high. But if we do look at the outlook and see what's being priced into the Kiwi, into the CAD, we've got about 38 basis points of cuts being priced in over the next 6 months. So will the outlook outlook statement justify that. If obviously they get an impression that they're going to be more aggressive, you're going to see CAD sellers. If they give an impression that they're going to be less aggressive, you're probably going to see CAD buyers. At a very simplistic playbook there. But certainly Aussie CAD very much on the radar, dollar CAD very much on the radar, given that resistance level there as well. And back in the precious metal space, as you can see on the day now, we've got gold down about $2, not particularly moving. Have a look at the daily chart of silver though. That's where we've seen a lot of flow. Silver is absolutely on a tear. You know, it's up nearly 30% year to date in Aussie dollar terms, but silver has been the trade du jour. And the gold-silver ratio is collapsing as we speak. So something to bear in mind if you're looking at precious metals, silver's really flying at the moment.